Any tips, any safety advice for our audience on how to ensure that either that your data is protected or to be vigilant on your credit score?
India is a very, very stable market as far as credit is concerned, and there are checks and balances put by regulators on who loan can be given to, what loan can be given. The technology adoption or digital adoption, typically, let's say, post-COVID has been phenomenally high.
Personal loans as a category has also become quite big over the last 10-15 years.
Credit score gets built by small loans which are taken for various purposes.
Let's get into the top 3 habits and practices that you should do to improve your credit score. 78% of our viewers aren't subscribed. Help us out, folks, and hit that subscribe button and help us bring you more incredible guests. Folks, welcome to Paisa. I'm your host, Anupam Gupta, and on today's episode, we are talking credit scores. My guest, Sachin S, Chairman, CRIF Highmark, and Regional MD, CRIF India, South Asia. Sachin, welcome to Paisa. Thank you so much for doing this for our audience.
Thank you, Anupam. My pleasure.
Great to have you here. CRIF has supported our podcast really well over the last few years. We've had previous guests also from CRIF, so it's really good to have you here. Thank you.
Wonderful.
Let's start. I want to, probably break this episode into 2 parts. The first part, let's talk about lending. Lending itself has changed.
Yeah.
We'll get to credit scores. And, anybody who gives a loan, the first thing that comes up is a credit score.
Yeah.
Right? How has the face of lending changed, right? I mean, it's the landscape has evolved over the years. Personal loans have gone up. The format of loans has also changed. Micro lending, digital lending solutions, quick loans.
Yeah.
All are tailored towards younger borrowers. This was not the case maybe, 10, 20, 30 years ago.
True.
Just walk us through how lending has changed.
Perfect. So, Anupam, as you rightly said, there's a lot of change happening the way younger generation looks at loan process as well, right? I want to basically draw an analogy here is that, younger generation or Gen Z, what you call them, typically, whatever they are doing, if they are using a ride-hailing cab like, the Uber, or if they are using e-commerce app, basically the life has become few clicks, get the work done. Very simple to use kind of platforms. So I think, cases like where the lending is a requirement, expectation is that, lending also should be as smooth and as friction free, what we call it, right? So absolutely, that's what the change is happening, that, people want a quick, fast journey, quick, decision making from their side, and insights of what they are getting into and what they are not. I think that's what lending is all about for the Gen Z.
Yeah. And then personal loans as a category has also become quite big over the last 10, 15 years. And within personal, probably unsecured, secured, depending on what. I think credit cards is a big
Big
component.
Absolutely.
So why are personal loans, why are they gaining traction?
Yeah, so many things. One is that, people want credit to fulfill their dreams ahead of the time they have earned the money, but they have basically hope that they'll be able to, or they have a sort of sense that they will be able to earn that kind of income and basically repay it back, right? Now, there's a cost attached to it, but they are willing to pay for that cost. So personal loans basically helps in many ways. If you talk about buying any consumer goods for festive period, gifting, even eating out can be converted into a personal loan, or holiday can be converted into a personal loan. So most of these categories wherein there is no collateral, basically it's for consumption. These are typically personal loans. And credit card is also a type of category which is most of the credit card have been till now unsecured. Obviously, there are other categories also evolving. But these are all basically consumption led, and people would like to basically consume things now, pay for them later. And that's how this category works.
Yeah. So just talking about that, again, shift in consumer behavior.
Yeah.
Where borrowers are, they want like short-term, flexible loans for all kinds of things.
Yeah.
Every time now, almost every purchase that we make online, that is convert to low-cost EMI.
Absolutely.
Pretty much everything that you buy on commerce, e-commerce sites also you can. So this shift is there in consumer behavior.
Yeah.
And that you think will continue? How is it
Very much. So I would say today, even as little things as going for a salon or a spa treatment, you can convert them into EMI. You have line of credit or your card available, which is very much possible. Healthcare being converted to EMI, even food delivery, you can convert. And also there are 2 things here. One is that the loan itself, which helps young generation or anyone for that, is spending money and delay the payments over a period of time. But also it reduces the friction of checkout.
Okay.
So what happens, many of these places, if you realize that, there is a drop in the checkout, especially in, let's say, food delivery, etc. So what even service providers are looking at, that they want to provide these kind of facilities so that, the checkout becomes, friction free, and there are a larger number of people are able to order it, right? Obviously, it comes in bite-size loans. So basically, the loan sizes are not very big, and they are short-term as well. Yeah. So that's how the whole market has been driven.
I want to understand what are the, so we've covered the part about how this loan segment has increased, but what are the factors driving it, right? I mean, there have been certain things probably on the technology side, probably on the compliance side, probably on the regulation side that have helped enable this boom towards consumer finance.
True.
As someone who makes credit scores, what have you been seeing? What are the factors that have driven this boom so far?
Yeah. So first of all, if you say the technology adoption or digital adoption, typically, let's say, post-COVID has been phenomenally high. I mean, it's not that India didn't have a technology stack for many things which we do today, but because during COVID, it was not possible for people to really have physical interactions. So whether it's a KYC or signing of the loan agreement, which is digitally done now, or basically matching of your records with, or looking at your credit bureau score, etc. So basically, if let's say 10 steps are involved in giving a loan, all that 10 has steps, unless it's a collateral-based loan, it's become digital. Now that is driving basically a higher adoption because of support from regulatory side to have these kind of digital means. At the same time, consumption from the people who would like to have it, right? Now, credit score obviously is the, I would say, center point of this, because credit score is something which is, let's say, you basically give us rating to a person for the past behavior of the person as far as financial matters are concerned, in terms of repayment and how the person is going to behave. You predict that, right? So that's where credit score comes into picture. So anybody giving a loan would like to understand the probability of that loan coming back.
Sure.
And that's where the score is the past behavior which gets converted into a score. And that's where the prediction comes into picture. Yeah.
The young people don't have a credit score. They begin at some point of time, right? What is that first? I mean, how does the entire process get triggered? How do they go into the credit score ecosystem as such? When is that point that happens?
So that's an interesting point. So let's say if we start with the lifespan of let's say, a student. A student goes to college, opens a bank account, staying in a hostel, whatever, gets some money from parents. Now, if you are already holding a bank account and you have an income coming, even it could be from your parents, right? What happens? The bank then understands that you have a certain income profile. So typically the first loan, it is easier to get from the bank where you have a bank account, because bank understands you. They understand your demographics, they understand your income profile, they understand your expense profile. Now, since the payment adoption has also happened, people also understand that, how you are spending the money.
Sure.
Then comes in the picture is basically that, you do your first job. Now, when you join a first job, you have income coming in the bank, then bank understands that you have a recurring income which is coming, right? Now, credit score gets built by small loans which are taken for various purposes. So that's a way to build it faster. Let's say if you open up an account with the bank, take a credit card with the lower limit, use it frequently, but with the certain level of sort of utilization of the card, which will build you a score. Second thing also is beyond credit score is that now we have account aggregator and we have basically the income profile coming from banks as well. So that is where, even if you are new to the credit, if you have accounts in 2 or 3 banks, the lenders would like to basically get that data as well. And once they get view of that data, they are more comfortable. And that helps you build a score further.
Yeah. So when this process starts, what are the various parameters that you capture, right? Because now that becomes part of your system. And this information is given by the bank account or whoever it is, credit card, to you. You don't interact with the customer at all.
We don't.
That's one important point that I just wanted the audience to understand, that the credit bureau does not interact with you at all. They get the information. Please explain to us.
So basically how credit bureau works is that all the lenders are basically member of credit bureau. Now, all the lenders basically, when they give any loan, they submit the data on a periodic basis. Every 15 days, they submit the data that what loans they have given and what loans, how the performance of the loan is happening, right? Now, based on that data, we look at the borrower profiles and we create a score based on the, the behavior of financial behavior of the people, right? So we are not interacting with the consumers per se. right? We do have a contact point with that. I'll come to that separately.
Sure.
But this is where, banks dip into this data when they want to give a new loan. They basically check that has there been a previous, loan on the person, what kind of loan it is, whether the person has been paying it or not paying it, right? How much loans the person has, how much the loan is in line with the income, what the person is demonstrating by various means. And then they decide that they can give a further loan or not, right? So that's how the whole process works. Now, obviously, in this case, we do have an interaction point with the consumers, wherein if consumers have any grievances or any difference of opinion versus what they are seeing in the credit report versus what is basically there in their understanding, then they reach out to us and then we help them fix it through the lenders. But otherwise, we don't interact with them directly.
We'll speak about the credit score on the after the break. So I'm assuming that when you say that you capture the customer profile from the data that the bank or whoever is the loan provider gives you, that is whatever the bank gives. So it'll be like name, age, address, PAN number, I'm assuming. And
there are certain, so there's a prescribed format, but most of the data which is related to the loan account, the person who has taken the loan, the location of the person. So these are the kind of demographics which
I'll tell you where I'm coming from, right? Because these parameters decide whether the loan will be given to you or not. There are many. I've applied for credit cards where the drop-down menu says that where do you get your income from? So it says salaried, self-earning, whatever. The minute I hit self-earning or professional and I come down, it's gone. I'm just saying that obviously there is profiling happening, which is great because how else will the bank come to know whether the person is... but that happens at the bank end, you just get the info. I'm assuming. Okay, so now the flip side of this boom in lending, quick lending, 2-minute loans, is that for a young workforce, getting them into the debt ecosystem, loan ecosystem, so to say, also comes with its downside in terms of, job losses, economic uncertainty, inflation. And it also sometimes propels Gen Z to more consumption. What's been the experience so far on that? If I go just by how credit score patterns have been, say, for that younger category, is everything okay or is there some cause to be concerned?
If you ask me, in general, there is no cause for concern because, India is a very, very stable market as far as credit is concerned, and there are checks and balances put by regulators on who loan can be given to, what loan can be given, or what should be checks and balances by the lender for different loans types, right? So I don't think at a larger level, there is any cause of concerns or alerts, etc. But yes, different segments, different kind of behavior, different kind of purposes and size and ticket size of the loan, duration of the loan, these things matter. So any lender would have their credit policies and they would basically look at that, okay, what kind of credit policy I have and where this person fits in. If this person fits in within that policy, then many times the underwriting is automated. Even the system decides it. Even a lot of customers do get pre-qualified offers, which means that they are pre-qualified for a loan based on certain parameters, what has been assessed by the lender. But in certain situations, even when they are willing to apply for a loan or they are keen to provide many other things along with the data which banks already has, at times the bank is not very keen to do that because it is maybe the bank's priority is not to look at that kind of customers based on their historic behavior or the understanding of that kind of customer, or maybe the banks is focusing on something else. So I think it is also about the right kind of lender for a particular kind of borrower. That's also equally important.
Okay. And the other main thing that's happened in the last, that has happened in the last few years is technology, right? Technology, like you said, has played a very big role in enabling the entire processing of a loan,
cycle,
origin, underwriting, processing, whatever it is. How does it help you? How does that work in your case? Loan offers, underwriting, reducing fraud, how is that happening?
So it works across the board. So if you look at from credit bureau perspective, it has obviously a big role of technology because we are sitting on a data of crores of people, and which has to be accurate as much as possible, and we have to be able to provide it in very short time, let's say a few milliseconds to a borrower whenever the API call happens, etc. I mean, the whole game of technology for a bureau or a credit decision company is pretty high. But yes, it is one of the component of, let's say, 5 components would be involved in the technological process. So there would be mobile app, customer onboarding, KYC, fraud checks, which are done for the different ways it can be done. Matching of that the person who's taking a loan versus the account number where the loan has to be dispersed. Even that also be matched, right? And then there has to be sign of agreement. There has to be OTPs for everything. So that's why I'm saying if to simplify it, like if there are, but some places it's a pre-qualified, wherein you are a bank customer, wherein your bank is willing to give you maybe a couple of seconds, 10 seconds, 20 seconds. They just want to do a bureau check and confirm that you have not done anything in last a month or month and a half, which is detrimental to the decision of the loan. Or wherever you are taking a small ticket loan, like for food delivery or for other kind of stuff, then it's a smaller ticket, risk is less. So they know that you are there, have been taking delivery, and they are happy to give you a couple of ₹1,000 loan on that.
There's one more aspect that I just, because it's happened with me also, is that when your information is hacked, and the details such as your mobile number and maybe other details, when a loan is dispersed by UPI, there are chances of that going to the wrong person. It's happened with me because what's happened is that there are now layers within giving a loan. The person who's originating it can be a complete outsider, contracted to the bank or the NBFC or whoever it is. And the person who is verifying the loan can also be somebody else, and the person giving the loan. All three are different. Any tips, any safety advice for our audience on how to ensure that either that your data is protected or to be vigilant on your credit score? Whenever, because I think that some credit bureaus provide you that option that whenever a query is put on your name, that gives a notification. Right? You just help us with that.
So it's very important that I think some of the things, very important things you have highlighted, and I think it's, as you rightly said, very important for the audience, that whenever lender is checking on you to assess you about, giving a loan or so, there would be actually alert going from a prospective bureau to you, right? So that's where when you see any SMS or email coming, if you have not applied for a loan, you should get alerted that is there somebody applying on a loan my behalf, etc. Now, as you have seen the cases of the KYC being compromised, synthetic IDs are there, or there are various fraudulent activities have happened wherein people have applied the loan on somebody else and they have been able to get it dispersed by various means, hook and crook, or even aligning with the whole ecosystem, right? So it's not a one person's job sometimes, it's a whole collective fraud ecosystem is working, right? So in that case, one needs to be very watchful of that. Second is what I would advise is that, there is one free credit report Reserve Bank of India mandates all credit bureaus to provide. So in case of CRIF, people can come to crifimark.com, put their details, get one credit report in a year free, with where they can check it that what kind of loans are on their name and they can match it with what they have actually taken. I would advise that they should do that periodic check, maybe once in 3 months, once in 6 months, so that if any fraudulent activity has happened, if any loan is applied on their name, they will be able to check there as well. So these are the ways and means to be vigilant. But yes, as UPI and other things you have mentioned, obviously these are instant transfers, etc. So I think there one has to be obviously vigilant about how do they authenticate that who is basically accessing their UPI handle and how they are transacting with the person.
So folks, that is the important message here, that the RBI allows you to access your credit report once a year for free. And as Sachin said, please log on to the website.
Absolutely.
Download your credit report. Okay. I think it's called a credit report, right?
It's called credit report, yes.
And look at each and every section. It has everything that you can think of: your name, address, phone number, the number of credit accounts against your name. Could be active and inactive. Let's say that you had a credit card 5 years ago and you've discontinued that. It will still show up somewhere there. I think it also shows you the number of days in which you have not,
Yes. So how many times you have not paid on time. That also it shows. So basically everything gets recorded.
So if you have any issues with that, or you can spot an inaccuracy or anything in the credit report, it becomes your duty, because now you know to inform the credit bureau and what's called raise a dispute. Right?
It's raising a dispute, and then credit bureau will engage with basically a respective lender, and then they will communicate to them that the customer has said that this loan doesn't belong to them, or this loan has to be closed, etc. And then lender takes action on that, which is then converted into the data into the bureau again. And the next report, when you pull, you get that basically data taken care of.
Yeah. And if you're an obsessive person like me who wants to know his credit score every week or every month or every...
You're free to do. Yeah.
Please subscribe, okay? And subscription, I don't think is that expensive, right?
It's not. It's few hundred rupees subscription for a year, and also we are soon launching a platform wherein you can even gamify that. If you want to close, if you want to see how to improve your score, you can actually see that if I close this credit card, if I close this loan, how can my credit score become better? Yeah.
The advantage, of course, with a subscription product with a credit bureau is that you will get instant notifications whenever there's a loan query against your name. So I'm pretty obsessed with that. And of course, getting to know your credit score, we will talk about all of that on the other side of this break, because I know you're waiting to find out how a credit score is generated. Don't go anywhere. We will be right back.
Did you know Indians report nearly 800 cases of online financial fraud every day, which has resulted in losses exceeding 1,000 crores in the last 5 years? To keep you safe from such fraud, I am starting my newest podcast series, Conversation with Vigilante, an initiative by HDFC Bank. In every episode, I will feature special guests who can share expert insights on the different types of fraud, their modus operandi, and how you can protect your money. Stay safe, stay vigilant, and don't forget to tune into Conversation with Vigilante. Catch the episodes on all audio streaming platforms and V for Vigilante YouTube channel.
And welcome back. Sachin, credit score. To me, I look at it as the marks in an exam. ओके तो 10 सब्जेक्ट्स होते हैं, उनके हर एक के सब्जेक्ट मिला के फिर ऐसा एक टोटल आता है. इज दैट हाउ क्रेडिट स्कोर इज जनरेटेड? आर देयर लाइक वेरियस पैरामीटर्स? आई नो दैट इट्स फॉर बिटवीन 300 and 900.
Yeah. The score is between 300 and 900.
How is so? Are there like weightages? Because this is very secret under the hood thing that our audience does not know. If you can give some color as to how it's...
So basically, see, there are multiple parameters which have a different weightage. Now, which means that, let me start with one by one. Let's say you have taken loans, you are repaying on time, and let's say for 2 or 3 years you do that. Definitely it helps you build up right credit score, which number goes up. Now, if you miss some of the repayments, it reduces from there. Now, if you have credit cards and if you are using the credit card, let's say around 30-35% regularly, fine. It helps. It's a line of credit. So which means that you are not credit hungry. If you have a limit of, let's say, 3 lakh rupees, and if you are using a lakh rupee a month, is fine, because that's what is the credit card for, and it will help you build a positive score, which is a score going up. But let's say if you start using credit card of 3 lakh limit to let's say 2 lakh, 2.5 lakhs every month, then it starts showing that you have a credit hunger, and you are basically on the side of wherein the limit, you are almost touching the limit or coming close to the limit. So there is a risk of you breaching that limit, or your risk of you not able to repay that, right? And that obviously takes into account a little bit of a negative side of it, right? Then there are a number of inquiries you make for the loan. So suppose if you need a loan, maybe you can make an inquiry to 2 or 3 lenders, but some people end up making to 5, 6, 7, 8 lenders. I think that also reflects that, they are very hungry to get the loan. The more hunger it shows, it also shows that probably the need is very high, and maybe the repayment capability may not be as much, right? So some of these things are basically which helps score gets built up. But any professional which has, let's say, been working for about 10 years, has had 2 or 3 loans, which could be personal loan, which could be car loan, which could be housing loan, etc., and has been paying reasonable history of repayments, etc., the score could be around, let's say, 700, which is considered to be a good score for any further lending to be done. And it also helps in getting the right interest rate. So the better score you have, up to a certain level, it will help you get from a lender which has a low interest rate and best possible interest rate. The lesser you are, because of default or because of not having enough credit history built in, naturally you may have to go to the lenders who have a little bit higher interest rates, etc.
So credit utilization, credit inquiries,
and repayment on time.
I've kept that slightly to talk about that in depth, but I'm saying that when it comes to inquiring about loans, getting the loans, and how much you utilize, those are big factors.
Those are the big factor, and you should have some loans to pay. I mean, if you're not taking loan ever, and then you go to the bank and say that, okay, I've never taken a loan, so there is no question of default. So give me the loan. The bank will not be able to do that, because bank doesn't know that how your repayment behavior has been, right? So
repayment. Let's get to that.
Yeah.
Because there are lots and lots of myths also around it. for a lot of people today, optimizing the credit cycle is a big thing, which means that if the credit card repayment date is, let's say, first, they would like to stretch it and make it all the way to 30th, 31st. Do all those parameters make a difference? Like, if I pay on 15th instead of 1st, I'm paying 15 days in advance. That means I'm a good person, right? Versus someone who pushes till the end. Or from your perspective, it really doesn't make any difference as long as you pay by that due date.
So basically, as long as you pay by due date, it doesn't matter really. But as a good practice, you should keep some buffer because as we know that if you are putting a check, which is not so common now, but let's say it could take some time to clear. If you are doing any online transaction or standing instruction, there is a possibility that suppose if system of the bank is down that particular day, etc., for some hours, or sometimes transaction doesn't go through. Then you are risking yourself because eventually what will happen if transaction doesn't go through that point of time? Naturally, it will put a sort of mark on saying that it was not paid on time because bank will look at the money coming into their account, right? So it's good practice to, let's say, pay 2 or 3 days in advance, which given credit card companies and other companies advise it. Better practice is if you think you want to do that, put a standing instruction or ENACH, what we call it, or mandate, wherein automatically it gets paid. But in that case, typically it is done for the loans which are of fixed EMI. When it comes to credit card and all, some people are not very comfortable giving a blanket ENACH, etc. But in that case, you should be vigilant enough to pay it 3 days or so in advance.
When do the red flags start going up? Okay, so I have 2 questions here. One is, actually just walk us through the process of red flags, right? I missed the due date. What happens after that as far as the credit score is concerned? Like, is there a grace period? How do you identify recurring patterns? When does the credit score actually get hit?
So see, credit score changing is a continuous phenomena. So every month when the data gets ingested, the system basically looks at it that are there any behaviors which requires it to improve it or reduce it or keep it constant, right? Now, if you are saying that, okay, a payment cycle has been missed. Now, if payment cycle has been missed and reported by the lender, naturally it will impact the credit score negatively and it will also get recorded, right? Now, if you keep it open for long, which means that you are continuing to pay, so we have 30 days past due, 60 days past due, 90 days past due, and then there are also norms of Reserve Bank, etc., for calling it NPA, etc. So basically, if you are keeping it for longer time, even if it could be smaller loan, what will happen? You will get into the category of basically NPA within the bank's books, and naturally that will further, deteriorate your score, right? So if you have missed by any chance because of some whatever reasons, you had a low balance, you bounce back, etc. Immediate thing is to contact your lender and pay as much as you can. Ideally, clear it out completely, so that lender understands that it was not because of the reason of basically inability to pay or intent to pay. And if lender then corrects it in their records and they basically, so whatever data lender submits to the bureau will go by that data, right? So if lender agrees to basically accept your payment 2 days later and lender does not really counts it as a bureau will only be considering what data comes from lender eventually, right? So any default, basically one needs to fix it as fast as possible.
Right.
It could be by mistake. It could be, we have seen situations wherein if you have missed credit card payment, you call them 1 day or 2 days later, and then they might put some finance charges. They might call it a refund, but then if you call them, they reverse, etc. And they feel I mean, if you have been a good customer, they know that it is not intention.
So folks, you need to just keep that in mind that in case you've missed a payment, this will get recorded at the bank in real time, and then get reported to the credit bureau. So obviously your credit score will get affected. I'm assuming that the longer you delay, the worse your credit score will get.
Absolutely, because then what you come in a default category which goes to 30 to 60, 60 to 90 days or even beyond that. So what happens is that any loan further you are taking, this will show as we call it a delinquency. So this will show as a delinquency and it will show how much delinquency has been. So basically the correction is very much required. And as I mentioned, the bureau data gets submitted every 15 days by the lenders. So basically the data will be updated within 15 days time. So naturally any further loan you are applying for, the new lender will know that you have defaulted in the previous one. Right?
Wow, that's tough. So this is actually a sore point, where a lot of people just don't understand the process. Maybe you can help us with that. When it comes to incorrect data, I'll give you an example. This is one of the most popular examples that I've seen with my friends. Also, is that Now they have a dispute with the credit card company. See, for loans like a car loan or a home loan, there's the chances of disputes are less.
Yeah.
You decided in advance, then it just becomes a 10-year, 15-year, 5-year cycle. You just keep on paying the EMI.
Yeah.
But in case of credit card, it's transaction based, and each and every month the bill amount changes.
Yeah.
Right, and you can have disputes.
Yeah.
Sometimes people close their credit cards. Yeah. With some amount lying there, and they just get angry saying that I will not pay that amount, do whatever you want, you close my credit card. And it'll be like a very small amount, 1 rupee, 2 rupee, and it just stays there forever. You think you've closed the account, but the credit card company is still holding that. Now they might remind you also, might or might not pay. Maybe you've changed addresses,
Yeah.
you've moved on, you
Yeah.
know. So how does that work for credit score? It's a small amount,
Yeah.
but it still eats in somewhere. Is that true?
So see, when you come to the mathematics of numbers, right? Any amount is an amount, whether it's a small or big or whatever it is, right? So question is that there's no definition that this amount is less or that amount is more. It is that when you are closing a card or loan, we call it a loan account, you should close it 100%, and you should have a confirmation from a counterparty, which is a bank, that you have closed this. If you have any doubts, better to engage with them, visit their branch, etc. Take a confirmation letter, confirmation mail for your future records.
Okay.
Because anything you leave, whatever amount of that money is, whatever reason was that for, right? There's always can be a sort of, the reporting will happen based on that. And there can always be an impact of that,
Sure,
right?
sure,
So it's not like you leave it X rupees or Y rupees. It is about that once you close it for good, and you close it with, even if there is a gap of understanding, settle it with the lender and make them agree to whatever basically is the common mutually agreed amount is, and then pay that and close it.
Yeah. Walk us through the dispute. How
Yeah.
do I raise it? How much time does it take? What do you do? What should I do? And
Yeah.
what does that entire process be like?
Yeah. So credit card disputes are, people are becoming more and
Credit
more
score
aware.
disputes, yeah.
Credit score dispute. And people are becoming more and more aware about that. So basically people, they come to our website, they can raise the dispute. They can raise the dispute with the respective lender, or they can rate it with the, do it with the bureau, right? Now, if they do it with CRIF high mark, let's say bureau, we register their complaint. Then based on that, we look at check the data in the system what we have.
Okay.
If we think if the data is given by them versus the data given by the lenders is different, whichever lender there's a gap, then we send out the data back to them, right? So generally this, we take about, let's say 9 days to do this activity maximum. And then as per state regulated norms, basically lenders should take ideally 21 days, not more than that.
Okay.
Obviously, beyond that, there are some penalties, etc., also put in by regulators. So basically, we expect that within 30 days, this dispute should get resolved.
Yeah.
Now, if there is continuous, back and forth on this, it might take a bit longer, right? But I think I just want to highlight here is that sometimes the misunderstanding of a borrower, a person, versus lender could also be there, because what happens today when we take a loan on e-commerce website, or like we talked about food delivery apps or other places, there's a concept of loan service provider.
Okay.
The party which you are dealing with, actually the party is not the bank or a non-banking finance company by the RBI.
Okay.
So in that case, that the face of that,
You mean the platform?
yeah, the
Could be
platform, you are
Yeah.
engaging with, you are taking a loan of, let's say, 5,000, 10,000, 20,000 rupees.
Yeah.
Now that platform is partnering with some bank.
Correct.
So when you look at your credit report, you will actually see that the name of the bank who has financed it.
Yeah.
Now,
might
sometimes you
not-
may get confused that, okay, no, I never went to that bank, or never went to that NBFC and took a loan, but how it's showing in my place, right?
Yeah.
But I think it's good when you are taking any loan, it's good practice is that to note it down, that what loan you are taking, and look at the what we call trade line, or basically amount which you have to pay, EMI, etc. Match it with that. And at times you can see that it is written below it should be ideally written that, there is a third party which is providing a loan. So whether it's a cab aggregators, or whether it is a food delivery, or whether most of the time the lender will be a NBFC or a bank behind that platform. So many times borrowers that do get confused, they feel that, this is something, a fraudulent loan has been taken on my name. But when they discover it, when they engage, then they realize that, okay, they bought something from a platform and they might have forgotten about it. And then the loan is actually given by somebody else behind the platform.
Yeah. Folks, if you are buying, for example, there is a sale on an e-commerce site and you're buying your mobile phone on a no-cost EMI scheme, please read the terms and conditions carefully.
Absolutely.
Okay, because the platform, the e-commerce platform on which you're doing this transaction is not giving you the loan at all. In fact, when you go to see the no-cost EMI terms and conditions, please read, there will be a name of a bank or an NBFC who's providing that loan for you, as Sachin pointed out. And you need to be aware of that, of the terms and conditions, the principal, the rate of interest, the EMI, when it's due, all of that. Understanding that takes time. Hitting click and tap on your phone doesn't take time. But if you want your credit score to be accurate, up to date, and to show the right position of your finances, then please be careful of all this. And then like you said, you'll see that credit report and you'll find out, ye kaun se bank ne mujhe loan diya?
Right. And many times actually you are taking a 0%. For you it is 0%, but there is a subvention or there is a engagement between that platform and that lending company.
Loan provider.
So what is happening is that, they are adjusting the money in the back. They are giving you 0%. You are thinking that there's no loan here, but actually there is a loan which is happening in the background. Right? So you need to be careful about that.
And I'm assuming that in all probability, the minute you take this has happened with me because I just took I think a few months ago, I had taken a mobile on a no-cost EMI. The bank sent me an email straight away saying that, you have taken this loan, this is the repayment schedule, this is how much you're supposed to. It was very transparent. Ensure you do that, please. And then the credit bureau is not giving you a loan, believe me. So when your credit score comes, it's not these guys who are giving you that loan. They're just mapping the score to
we
your
are just
behavior.
mapping what has been reported by the lender. Now, lender knows that you have taken it. Now, you might not have noticed it because you are dealing with a platform.
And this is really important for credit card and unsecured lending, because unsecured lending is very expensive. A car loan or a home loan is a different thing because they're secured. If you understand the difference between secured and unsecured, then that's what decides the rate of interest. Let's bust some myths out here.
Sure.
Sachin, okay. The top two on my mind, and just help me here if I've missed out any. One is that the more inquiries I make, the lesser my credit score will go.
Well, it depends on. I would say this is not completely a myth, but see, again, there are 4 bureaus in India, and every bureau has a different way of giving weightage to that, right? So I would say a reasonable number of inquiries is fine. Let's say if you are taking a loan, it's assumed that 2 or 3 inquiries you should be doing it, right? But if you do significantly larger number of inquiries, then it is considered to be credit hunger. And then certain bureau may look at it giving a certain negative weightage for that. And because of that, your score may go down, but it is not so significant. But if you continuously do it every time you take a loan or you take too many loans, then naturally it will reflect, because that's the way it is supposed to give it an indication to lenders as well, that you are constantly on looking out for loan and you are desperate to get loans, etc. Which means that they need to be more careful about checking that how is your repayment capability is going to be.
Okay, having more credit cards improves my credit score?
Not really. You need to again have a credit. So credit cards should be in line with your income. Now let's say you have more credit cards, it means that you have line of credit from those institutions, banks, which means that you have loans open to use, which you can use any point of time. So if you, let's say, have 2 lakh rupees to 5 lakh rupees limit of, let's say, 5 or 6 credit card companies, which means that they have approved this for you, which means this is like a line of credit. Now, this, if you are, let's say, high net worth individual, it's fine. But if you are a younger person who is basically just about 25-year-old, started working 2 years back, 1 year back, and wanting to have 5 credit card because it's available on airport, it's available on petrol pump, it's not very advisable, because what happens every time you take credit card, they will also assess that what your payment capacity is. Right? So the more number of cards you might get, but then it also reflects that you are already exposed to a larger number of loan. So then you go to take a loan for a bike or a car or something else, they might look at that you are already exposed to a higher lending approvals, and they might not basically be let's say keen to give you the loan for what you need. So I think let's keep it within the limit. Maybe 1 credit card extra is fine, but keeping it like 7, 10 is practically not, is not advised at all.
Having no credit card is a great thing.
Well, it's a great thing, but it's difficult to have in today's life. And I think having 1 credit card or 2 credit cards is always good also, because it has a convenience of usage. And it also helps in building credit score if you are using it effectively.
Let's get into the top 3 habits and practices that you should do to improve your credit score. What would they be?
So basically, one is that you should not be on a 0 credit life. You need to use some credit. But, as I said, compared to your income, compared to the limits what you already have, you should not be maxing it out, right? So that's one. Second is that whenever you are taking credit from credit card or anything, you pay 100%. Revolving is not really a good habit, and because eventually revolving leads to basically paying high interest cost. At the same time, there could be a default because you are spending beyond your means and you're not paying it, right? So 100% payment is the best way to do. EMIs all have to be paid on time or before time.
Correct.
Right.
Correct.
So that's absolutely there. Now, keeping that in view, I mean, taking smaller loans here and there for various kind of things is not at all detrimental. It helps you keep, being in the circulation of the credit economy.
Sure.
And I think whenever you're closing a loan or whenever you're paying off, ensure that you have closed it completely. Whether it's a car loan, you take a NOC from the bank, or if it is a home loan, take again NOC, documents, etc. So that nowhere it is by mistake also reflecting that loan is open and you are supposed to pay something. If it comes to that and because of your address not being updated or mobile number not being updated, if bank continues to keep it in their record and continues to keep it submitted to the bureau, then naturally it will impact it. Yeah.
Does closing a credit card impact my score?
Not really. I mean, it doesn't impact negatively. But if you have larger number of credit card and if you close it, it will help you improve it. Because then your line of credits will become lesser.
Right.
And then you will be shown as a lesser credit hungry person. And also, if you are limiting it to certain number of cards, but then also you have to balance it out that the utilization of the limits in an individual card should not go too high. I mean, exceptional situation could be there. I mean, if you are in a medical emergency, you are supposed to have that limit, right? Or if you are on a festive season, you want to buy a gift for your family or you want to spend in a travel, it's fine. But if you do it probably a couple of times in a year, it's okay. But if you do consistently for like say 6 months, 9 months, then naturally it is showing that you are credit hungry.
So from what I can understand, more than the number of credit cards, what's more important is utilization and repayment. As long
repayment is most important.
Repayment is most important. So folks, there you go.
Repayment of anything is most important. I mean, if you're taking a loan and if there's a date, you have to pay before that. Because that is something which is completely no that you spill over the payment to next month, next day. No, that's completely.
That's like the scoring subject in your exam. That if you can score the highest there, you're kind of safe in that. How do we, there are now agencies and firms that help you in credit score repair. Because see, the reality is that people default. People go through bad times and, for no fault of theirs, the loans, and it's not just credit cards, could be any other loans, they default on the payments. And the credit score, goes for a toss. And like you said, in good times, in normal times, if it takes one entire month for my credit score to improve, then when things are bad, then it might just take longer. I don't know what these credit repair firms do, but the fact that they exist means there is a need for it, right? If you're talking just about the defaulters, or at least for people in that really, really bad credit score zone, what is that, less than 500?
Obviously. Anything below 500 is completely no. I mean, it is really bad. Or even, I would say, many of the banks would not give you. So good banks will not entertain a customer less than 650, or some of them will be 680 or so, or 700 is considered to be a safer one.
That's very tough.
So 500 or something, unless you are going for a secured loan like gold loan or something, you are carrying a gold and taking a loan, then they may not really so much bother because anyway they have a secured. For unsecured, it will be very difficult to get.
How do you get out of that? How do you actually start repair? How does that process happen?
So basically, again, first of all, awareness about that score is bad. Looking at the report yourself, understanding why it is bad, right? That's first part. Then second is that where you need help, how do you get it, right? So obviously there are no official channels to say, okay, fine, you go to a like X person and he will help you or she will help you. But there are financial advisors who are branched out in this space. They are helping people. There are some of the apps or some of the fintech players who have also come into this space. In a nutshell, what happens is that irrespective of whomsoever is advising you, whether it's your friend, family, or some advisor, the bottom line is that the person should be able to guide you that how to close those loans or how to settle those loans. And also, some people get into this trap of loans because they have one loan taken at a certain interest rate, then they take another loan and another loan. To repay that loan, right? Now, what happens is that they are trying to take a loan which will repay the higher interest cost loan, right? And if they miss, obviously it causes the bad credit score and then the new loan cannot be taken at a low interest rate, right? So basically, I think you need to sit with somebody or think through yourself that how can I look at my total liabilities? Which are the loans I can pay off and close it? Which are the ones which are typically high interest? And basically by closing that, how would I improve my score? How do I use my future course of income to basically pay the rest, and or at least have a settlement discussion with rest of the, or let's say if it's a credit card, probably I'll pay minimum balance and revolve it.
Yeah.
So it will charge interest, but it will not basically put me in a defaulter list, right?
Yeah.
So there are certain fintech companies, etc., who are also engaging, and some of them are even the, appointed collection companies of certain institutions. So they work with you, but the bottom line is that you have to either pay off all that what is there, or you have to get it settled with the
Bank, or whoever
bank,
is the loan provider. Yeah.
or you have to at least get settled partly to say, okay, fine, there's a waiver of interest and I'll pay the principal, but I'll close it off. But this is the only way to basically get back to the journey of improving the loan. So it takes some time, but it can be improved. It's not that it cannot be. But some of the things what you are doing today will remain in your history. But it's like health.
Yeah.
If you are not so strong health at this moment, you can always work towards getting a better health.
Sure,
but
sure.
it will take some time. Same as the financial health.
Folks, just be very careful of that. Repay your loans on time, and in case you do fall into a debt trap, there are people, agencies, firms who can help you to get out of it. Not impossible, tough, but when it has to be done, it has to be done. Sachin, we are done. Our last standard question that we have for all our guests who come here is any book that you're reading or any content that you're watching, any recommendations for our audience?
Well, I generally, I'm not a book reader much, but I do read a lot of content on financial services, etc.
Okay.
So I think, whatever I see, I think typically reading 3 or 4 newspapers in a day is what I do.
Nice.
And I think that takes care of my all the reading.
Yeah.
Rest of the time I do is read the CRIF high mark reports. They themselves are so much insightful.
Yeah.
So that's all I do,
What's happening in the credit trends in India? If I ask you, like, for example, what does your data tell you in terms of the average scores in the last, 5-10 years, have they been improving? Because you're at a vantage point. You can actually see behaviors change and what's been happening.
So I would say awareness of credit is obviously improving.
Yeah.
Now, as far as the scores are also concerned, these are sporadical. It's difficult to say that, okay, what is the overall trend? Because what happens, we had this microfinance crisis, so there is a bit of challenge in collections there. There is a lot of write-offs have happened, so obviously it would have spoiled the score of many people. On consumer loan, also there has been a bit of challenge. Credit card offtake this year has been down.
Okay.
New thing which is coming, secured credit card.
Okay.
Which is what I just wanted to share that,
Please tell us about that.
So secured credit card is basically credit card against the FD.
Okay.
Let me simplify it. So basically if you are not getting a credit card because you are a young person just coming into the employment, or you are maybe a housewife, or you might be a self-employed person, what banks are offering, or even fintechs are offering today in association with bank, is that you put a FD of 1 lakh or 2 lakh rupees, or maybe 50. It can start with even a few hundred rupees or something, and you put that FD. They will give you the credit card.
Okay.
Basically with line of credit up to that amount.
Oh, okay.
So basically what's happening is that you are securing their payments by putting that fixed deposit.
Okay.
Now you start using like a credit card. What benefit you get is that you get basically certain credit period, which is typically 45, 50 days, whatever it is. Second is that you get reward points. Third is that you get a lot of vouchers, benefits, etc. But in return, what the banks are keeping are basically the FD, which is amount, line of credit given to you, so that, they are not able to, they don't get into default situation and they dip into the FD. So basically there is a lien on the FD and they will dip into the FD.
Okay.
So let's say if your bill was 25,000 rupees, you have put a 1 lakh rupee FD. If you didn't pay, they will take away 25,000 from FD.
Yeah.
So it helps both ways. But this is expanding the credit market.
Yeah.
So new to credit people are basically, or the people who have had a challenge on their score, it could be a good tool for them to be able to basically improve their score or build their score.
Yeah. Okay, on that note, that is a wrap on this episode of Paisa Vaisa. My guest, Sachin S, Chairman, CRIF, IMARC, and Regional MD, CRIF, India and South Asia. Sachin, thank you so much.
Thank you, Anupam.
For doing this for our audience. Great to have you here.
Thank you. Thank you for having me here. Thank you so much.
Thank you.